Welcome back. I'm Pratap here. Today is 4th February 2025. In this video, I'm going to evaluate the performance of high liquidity zones identified in the previous end of the day report. And also we have a special topic today. So I'm going to address when we can use previously analyzed HLQ zones even though they are not identified in our software. Okay, even before that, all of you please understand we are providing complete free training on supply demand zone price action. Some of you might be knowing it is a highly expensive training program. The cost of the training is over $8,000 but we are providing complete free training. All the training lessons are available at our NeoStock YouTube channel. You can access all the lessons in a playlist that I explained in this post. You can access this post by clicking the tab posts at our NeoStock homepage. Some of you might be seeing the tab community instead of the tab posts. So click on that community tab. So once you get access to this post, there is a link, YouTube playlist link that will take you to all the training lessons. So you just click on the link. Now we are into the YouTube playlist, Supply Demand Zone Price Action course. In this playlist, I kept all the training lessons, but you need to start your training from lesson 1.1. That lesson is available at the bottom of this playlist. So scroll down to the bottom of the page. Here, starting from lesson 1.1, all these training lessons are available in an order. So please go through all these lessons one by one. But you must go through all these lessons according to the training instructions I mentioned at our Telegram channel. I provided the link to our Telegram channel in this video description. So please join at our Telegram channel. Once you join, you will find a pinned messages at the top of the window. You will be seeing a pinned messages. Click on the pinned messages. Now you can able to find the training instructions. And if you learn this subject according to my training instructions, definitely you will become a very good independent trader in the coming days. So please make use of this opportunity. Now I'm getting into the analysis discussion, how our HLQ zones performed in today's live market. Okay, yesterday end of the day, I identified 1, 2, 3, 4, 5, 6 high liquidity zones. And a couple of stocks gave the trades, but I am considering only one. Why? I will explain once we get into the discussion. First, we will complete our HLQ zone related trades, and then I will explain the topic, our main topic. When you can make use of previously analyzed high liquidity zones even though our software did not identify in the current latest report. Okay, first one is ZMR. This is a 75 minutes high liquidity zone, drop 1, 2, 3 base candles, medium size candle is also part of the base, and then a drop candle. This is how our software identified it as a high liquidity zone. Actually, we did this analysis some almost 10 days back. According to that analysis, we should ignore this stock. There are higher chances this zone will be violated. If Saturday's candle, are you seeing this Saturday 10:30 candle? If this candle would not have existed, this price action would not have happened on Saturday, definitely I would have ignored this stock today. Definitely we would have missed a very good trade today. Opportunity. Why? You will understand sometimes how we get cheated with these charts. Previously I told several times, but even then, because we are human, I am also human, so I also make some mistakes sometimes. If this price action would not have happened, why I am saying, see, from here prices sharply came down. That made me some curiosity. Curiosity, because I didn't recognize I made a mistake in our earlier analysis. It's not mistake actually, it's an ignorance, that's it. Okay, now what way I was looked into, how my perception is changed by looking into this Saturday's price action, that is important. See, the moment I looked into this, I thought there could be an aggressive trade setup might be there. So I want to look into that aggressive trade setup. You already land aggressive, but actually it is not aggressive trade setup. It is a fine-tuned zone. That fine-tuned zone is ignored previously. Actually, when we analyzed this chart almost 10 days back. Let me go to daily time frame. You will understand when prices was near to. See here. On 23rd January report, our software identified stock near this zone. On 24th January video HLQ analysis, if you look into the video, I analyzed this chart in a different way. Not the same way what we are seeing today. First, what I did in 24th January, let me explain. How my mindset is changed after seeing this price action. This is on Saturday, special trading session. And this price action helped me to identify this fine-tuned 5-minute zone. But why we didn't identify this fine-tuned 5-minute zone? That also you should understand. That is a very important lesson from this chart. Okay, anyway, it is a 75-minute zone. So what I have to do? I have to analyze on the 15-minute zone. Now let me hide the recent price action. So that how we analyzed it earlier without looking into the recent price action, let me explain. So I went to the 15 minutes time frame. Let me hide the previous price action. By looking into the 15 minutes I have drawn a zone, a drop, 1, 2, 3, base candles and a drop candle. Let me draw a 15 minutes supply zone here. This is the 15 minute supply zone. Why I ignored? See here how this candle looks like. This is looking like a medium size leg candle. Is it really? Actually that is wrong. Why it is wrong? The reasons also explained several times. How we get cheated with the charts. Many people say by looking into the charts we will be in a position to identify the zones. That is not 100% true. Sometimes we get cheated. Why? Because of these highly explosive leg out candles. They make earlier candles smaller on the charts. That is what happened. This is a very good leg out candle. This leg out candle simply ignored. Why I ignored? There are other reasons. On that day, we got so many stocks. So many stocks, we have very good fine-tuned zones. So I have to analyze so many charts. Maybe this one I might have ignored on that day. But why today we perfectly did? Because of Saturday's price action. If that would not have happened, still the same old chart might be there. I might have ignored simply by saying this zone will violate. But today after getting the trade, we might have realized we missed an excellent trade opportunity. See, this is a good lesson for you because you also make such kind of mistakes. Knowing the fact I made mistake, then imagine you might be making more mistakes than I am doing. Every time what I am seeing, because of these highly explosive leg out candles, the earlier candles will become smaller. Sometimes we may feel they are not right leg out candles. We consider, see this is I consider medium size candle, this one. Actually it is a big candle. Currently you are seeing it is a small candle. Okay, still before we get into this discussion, look into this candle. What I did on 24th January analysis, again went to the 5 minutes time frame. 5 minute structure is not good in this zone. Moreover, a lot of consolidation took place here. Recommended. I am not comfortable. This zone will be violated easily. That is what I said. Actually, that is what happened. This is easily violated. Until here, our analysis is perfect. But what happened on Saturday? Look into Saturday's price action. So, okay. So the Saturday prices came, almost went into this, again came down, and then it is violated Saturday, and from here prices went and came down. My curiosity is, why such a huge sharply? Definitely there is a strong institutional order flow might be there, or maybe I get a chance to look for aggressive trade setups in this area. You already land aggressive trade setups, different scenarios. Price is sharply moving down. Maybe just before that there could be a 5-minute zone which is not fine-tuned. If that is not tested, next time we get trade opportunity. So that made me to get into this area. Okay, anyway, this is violated. What I did, I deleted. This is anyway we expected. This will be violated. Fine. This is gone. Now what I did again, I went to the 15 minutes, did a fresh analysis. Now I realized I just hide this. Then I realized that this is a very big candle. Let me hide. See, now it is a medium sized candle. Now it is looking like. Let me hide this. Now all of a sudden this is looking like a huge, large candle. This candle made this as a medium size. But remaining all this, just hide this, compare this candle with remaining candles on the chart. Okay, see now all these are all medium size. This is a large candle. This is a medium size candle. All these are all medium size candles. This is a medium size like base candle, maybe. All these are all base candles. This is the medium size leg candle. This is a big candle. This is a good enough to consider it is a leg out candle. Then where is the leg in? See here, you have a failed ERC candle as a leg in. You have 1, 2, 3, 4 base candles, and then you have a leg out candle. See, all of a sudden how candles become bigger. See, all these are all medium sized candles. Then immediately I have drawn this 15-minute zone, rally, failed ERC candle as a rally. You have 1, 2, 3, 4. Okay, this is a medium size part of the base, 1, 2, 3, 4 base candles and a drop candle. This is an excellent 15-minute zone. Now if you go to 5 minutes time frame, even more interestingly, you will see, go to 5 minutes. You will see two institutional order flow inside the 15 minutes. You will see why I have drawn only one. I will explain. See, all these, you won't look any proper zones, but hide this candle, bigger candle, highly. This is a highly explosive candle. How they are changing our views on the charts. See, now you will understand. You have a rally candle, you have a base candle, you have a drop candle, rally base drop, and also again you have a drop candle, you have a base candles. Again this is a drop candle, a very big failed ERC candle, big candle, large candle, and this entire body came out of the zone. Definitely you can draw a zone like this. You have two institutional order flows, and this is almost LOTL scenario. If you draw wick to wick, see, it is LOTL. In LOTL scenario, generally where the origin, there you plan, because see, you can also take a trade here, but is the risk is within your accepted limit? If yes, you can take, because sometimes prices get into this first LOTL zone and it will push the prices down. It possibility is there. That is what happened on Saturday. But if your risk is very high, you cannot. So that's why this is the area. Okay, risk management type 2 proximal entry. This is the area, our actual plan. If prices did not go, you won't. But Saturday what happened? You see Saturday budget trading session. Price entered into this zone and this zone pushed the prices down. It gave an excellent trade. But Saturday we can't take a trade on this zone because this is not listed in our software. But it worked very well. You may say, yes, they work. When they work, why we are not taking previously analyzed charts? That is what was the main topic of our today's session. I will get into that topic later. But meanwhile, one point you have to observe. Saturday when market was moving sharply up and down. But have you noticed? Saturday we got a very nearly, how many we got? We got 11 trades we got on Saturday. 9 are successful. We have seen. Huge profits they have given. This is also huge profit. See here you have a drop base rally is there till their prices reached. Can you imagine how much profit you would have got? Drop base rally. When it reached Saturday 11:30 and entry at 11:30, and when it reached the target at 11:50. See, 11:30 you got the entry and 11:50 it reached the target. You know, huge profit you would have got. You know what kind of ROI you would have achieved on that day? In case, I'm just telling, the risk management point of view, you may not accept. But if you consider two separate trades, and first one is anyway successful, that way you would have got 1:10 RR you got. Definitely you would have got an ROI something around 1:16 or 17 or 18 you might be getting RR. Definitely you will get. Anyway, I am not getting into those details. Anyway, we haven't, but I should make sure you all must understand the power of our high liquidity zones, how much powerful they are. When market is crashing, why? Our high liquidity zone is able to give the profit. Why our high liquidity zones are working against the actual market movement? Or in case market is crashing, why our high liquidity zone giving support to the market? Exactly it reach at the high liquidity zone, it get the support. Or exactly it reach high liquidity zone, it get the resistance. Either side it will happen, right? Why high liquidity zones are behaving like that? That is the beauty of high liquidity zone concept. No other concept is giving such kind of profitability or such kind of success rate. Today, why we are talking a lot about high liquidity zones? Because that concept is doing the magic. Luckily today, at least you people, whoever is listening my videos, you are in a position to understand a new concept that is completely changing the dynamics in the market. We are not even bothering what is happening in the market. I'm talking about the news point of view. We are just focusing our trades. Let it happen, whatever happen in the market. We are not worrying. Okay, does it reach fine-tuned 5 minutes? We will take a trade. Sometimes if it fails, okay, it is okay. It will hit the stop loss, immediately we will exit. But those situations are very rare. Okay. So let's come back to the let's come back to this discussion again after some time. First, let us focus on our trade. Okay, anyway, risk management point, maybe it may give you a second successful trade also today, that possibility is there. But risk management point of view, we can't combine both these zones. Anyway, it is tested. We will wait for the one which is a fresh zone. So if it is a high liquidity, may not let prices up to the second one. But our risk management point of view, we have to take. See, all these candles looks like a small candles. The moment you hide this very big, highly explosive, the view on your chart is changing. That's why always I suggest, whenever you see a large candles or whenever you see a huge gap, hide those candles to get the reality on the charts. See, the moment you hide, you got the reality. A rally base drop. Again drop base drop. And this drop base drop is already tested, and we can't combine both due to risk management. So our trade plan is on this rally base drop. And today prices entered into this area. And sharply how it came up to this 15 minutes target. Even further it went down. Here we have a high liquidity zone, 15 minutes high liquidity. Till then prices went. That high liquidity zone again pushed the prices up. Let me show you that 15 minutes high liquidity 15 minutes zone. Here we have a rally base drop. Sorry, rally base rally. This rally base rally is holding the prices. And today also prices came up to this zone and again started moving up. But anyway, our focus is not on this. Our focus is daily 75. This is a 15 minutes high liquidity. But whatever it is, any high liquidity zone is a high liquidity zone. Whether it is 5 minutes or 15 minutes, the only difference is success rate. You will see the difference. That's it. Daily 75 minute zones, they are giving you 80% success rate. Maybe it is a 5 minutes or 15 minutes high liquidity. They may give you success rate maybe between 55% to 65% success rate. Definitely they will give. How Nifty, Bank Nifty traders, they are trading based on these high liquidity zones. 5 minutes and 15 minutes. They are not expecting 80% success rate. They are expecting 55 to 60 is a very good success rate for them to get good profits. Even though few trades fail, the successful trades give more RR. That way they get more profit. That's why some traders are using only our Nifty, Bank Nifty supply demand zone chain. But only disadvantage with Nifty, Bank Nifty supply demand zone chain, some days you might be missing trades. Price may not be reaching up to our high liquidity zone. At the time, maybe more days you need to sit ideal. But our HLQ zones, it is analyzing 240 stocks, it is analyzing. At least every day it is giving you 2 or 3 stocks. Within a month, if you have 22 trading days, at least some 16, 17 trading days we are getting trades. Maybe in that, maybe 1 or 2 days, some trades might be stopped out. That is okay. But you have successful trades, maybe at least within a month, 14 to 15 or 16 trading days you are getting. I'm not talking about days, I'm talking about trading days. That excludes Saturday and Sunday. So when you get majority of the trading days, so we get trade opportunities. And moreover, these trades are having 80% success rate. HLQ zone strategy. So that is the beauty of this strategy. Anyway, I must thank our Saturday's budget days price action. Otherwise, I might have stick to the same old analysis. Stick means already analysis is there in my chart. I would have ignored this stock. But sometimes I also realize the mistakes I make. Probably every time I have to analyze the chart before we get it. See, this is just ignorance. By looking into this candle, I took my decision. And that way I did not consider this as a leg out. Just look like, okay, my concentration is on this area. That's it. Okay, this is compared, this is a big candle, this is a medium size, a drop, base, a drop. But the moment I hide this, all of a sudden it become a large candle. The large candles, all these candles, the same size this candle is also having. Remaining all are either small or medium size candles. See, all of a sudden how analysis is changed. That's why always hide the highly explosive candles or gaps, candles with big gaps. This is a problem with the charting software. Not only TradingView, any charting software, this is the problem because of the scale adjustment. You are seeing the scale, right? For the scale adjustment, they will take a decision. When a candle occupies the bigger space, immediately they adjust the scale and they make the scale a smaller. The coordinates, they make it small. See here, the moment I hide, see what you are seeing? Look into the scale, you will get clarity. Now you are seeing 75, 50, 75. The moment I hide, see the coordinates 75, 80, 75, 60, 75, 40. And because of the scale, the candle visibility is changing. That means because with smaller values you are using in the scale, the candles looks bigger. So this is the problem with any charting software. That's why when people say I can scan any zone with my eyes, I don't require any software. When people say I don't believe on that statement because I am a software guy, I know the problems. You can recognize only after you adjust the scale and take care, then only you can recognize properly. Not only me, you also can recognize now after this adjustment because it is clearly visible. When it is not clearly visible, when scale is not adjusted, at that time we miss all these zones. Anybody by looking into the zone, they say it is a medium size like candle, base candles, drop candles. See, this is a medium size like candle, the one which is there inside. But for you, all these candles looking like a tiny candle, small candles. That's not real. All of a sudden, a tiny candle has become a medium size candle. See? Tiny candle become a medium size candle, and medium size candle become a large candle. See here, this is a failed ERC. Earlier it is a base candle, it looks like. See? Maybe a base, a little bigger than base, maybe this one. But anyway, see, that's why the view how it is changing the moment scale changes. So, should be very careful. Anyway, it is a perfect trade, GMR Infra. It has given a good profit. How much profit till this 15-minute zone? It has given, GMR Infra has given 8,831 rupees profit, which is 8.8% ROI. This is our performance point of view, but not practical. What is the real practical? Your practical is because there is a gap, pro gap, mostly you would have exited here. Let me draw a horizontal line. This could be your target. But why I am capturing up to this? Because it achieved. Our software zone achieved at least. If it does not achieve, the minimum target we would have considered. Software performance point of view, I am talking about. So least we consider 1:3. Maximum we consider up to 15 minutes target. In between we consider pro gaps and all. This is the order generally we follow for performance point of view. First always we look whether it is achieved whether it achieved 15 minutes target or not. No, it is not achieved. Okay, next we will check, does it achieve? If the pro gap is there, pro gap target is achieved or not. No, it is not achieved. Then we will check minimum 1:3 RR is achieved or not. No, it is not achieved. Then we will consider the trade is a failed trade. Many times they will be stopped out. Suppose minimum 1:3 achieved, remaining 2 did not achieve. Then we will consider a successful trade. Performance point of view I am talking. Okay, 1:3 achieved and also till the pro gap it is achieved. Then we will consider till the pro gap whatever the profit, that is our profit. Performance point of view I am talking. Our 15 minute zone is also achieved, it reached. Then we will consider 15 minutes, till then whatever. So this is our software performance point of view. But your mind may not be thinking like software, right? You are a human. Lot of emotions will be there. Once you take a trade, whatever mind will be telling, exit, 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 exit. That is what you will be getting continuous music from our mind. Do you agree with me? If you agree with me, please put your answer in the comment section. so that at least I know how many will agree with this statement. Once we take the trade, always we get a music from our mind. What is that music? Exit, 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 exit. And who controls those emotions? They will become a good traders. So those who can't really control, at least use some trailing stop related concepts. That way you plan your trades. Wait, at least it reaches 1:3 RR. Then you use trailing stop loss. Don't use the moment you take trades. Many times what happens? After you take the trade, sometime prices will be moving up and down near the zone, and if any of 1 minute zone is violated, immediately you exit and you won't get any profit. Sometimes it will happen, prices will be maybe demand will be very, very strong. Prices will be moving sometime. Consume all the demand. It may take some half an hour or 20 minutes, sometimes even 1 hour, and then it will push the market. The more and more time it takes, and our BP will be rising, our blood pressure. Why? That is the human psychology. We want to book profit immediately. But remember, you feel like that in the early stage of your trading. You have to go through that phase. Even I was also at that phase at the early stage of my trading. But it takes some time. Maybe initially you book the profits and later you will be realizing I missed big profits. After you repeat such kind of cycle for 1 month or 2 months, then slowly you will realize. Then you prepare your mind in such a way, you wait for some time. Your mind will be started accepting to wait. In between the small up and downs near your entry, you won't bother about that. After 2 or 3 months, you know what will happen? Your mind will accept taking a stop losses. Your mind will accept. Probably by the time you start your trading by 5 to 6 months, you won't react much if your trade is stopped out. At the time, what will happen? When these small movements near the entry price, you don't bother because you are already prepared. Okay, if it hit the stop loss, I will exit the trade, no problem. Maybe next trade I will get profit. That way you will be accepting. The moment you accept, you know what happens? You don't book your profits. After that, majority of the times, what will happen after that? Prices will be started coming down. Why? Because high liquidity is having higher success. It won't stop out easily. Rarely it happens. So then it will be started moving. Then it will reach 1:3 RR. Some people always they book in the early stage. Okay, fine. Early stage until you get some confidence that you are getting profits. But you will be realizing, okay, because you are exiting at 1:3 every time, and after that it is giving more profits, why should I unnecessarily lose those profits? So let me grab more profits. That way you will be waiting instead of booking the profit at 1:3. Prices will be coming down, you get profits, big profits, you enjoy. Sometimes after reaching 1:3, again they reverse and they hit the stop loss. And that day you get some pain because already 1:3 RR achieved, I didn't book my profit, that way you feel. After some time again your mind will accept and your maturity level will also increase. Then you realize the importance of using trailing stop loss. Then after reaching 1:3 RR, you will be started using trailing stop. Maybe the 1 minute trailing stop or 5 minutes trailing stop, depending on that particular situation on your charts, you will be in a position to take a decision. If near any 5 minute zone is there, near 1 minute trailing stop loss, you take 5 minute trailing stop. Suppose if your 5 minutes zone is very close to this your entry zone, you don't look into that because all your profit will go if prices are going back. At the time nearest to the zone, any 1 minute trailing stop loss is there, nearest to 1:3 RR. Any 1 minute zone is there, you will use the trailing stop loss. That way you will be taking better decisions. From that time onwards, you will be thinking like a professional. That day onwards, you control all the emotions that is happening. It is a cycle. Everybody should undergo this cycle. You must realize as a trader what kind of psychological cycles you should handle. You will understand slowly once you realize. But remember these cycles, this is how you will be. That's why many of you people, today you will be thinking, because all are newly learned these concepts. Maybe few people might be experienced people. Today they are getting good profits. But majority of the people are beginners. Always your mind says exit, exit, exit. Some music will come from your mind always. And you follow the music. So this is about ZMR Infra. I'm sure practically this could be the right place to exit, or if anybody using trailing stop loss, you would have gained maximum. See, look into the 5 minutes time frame. Is there any 5 minute zone here? Yes, we have a drop base. A drop is there. After that, again one more drop base, a drop. You will readjust to this drop. Now it reached this 15 minutes. Still those who are aiming for more profit, because there is a high liquidity zone is there, still you would have got. See, here we have a high liquidity zone. Prices reach till that high liquidity. So those who are using this 5 minutes trailing stop loss, none of your 5 minute zones are violated. Here you see failed ERC candle, you have a base, you have a drop. Prices picked up from this this supply zone and again came down. Now again drop base, drop is created. Again drop base, drop is created. Again a new finally reached. Still you are expecting this high liquidity zone violates, and if you are thinking more profit I want to capture, and if you feel like that, probably this drop base drop is stopped out here. So here you would have booked your profit. And those who respect a high liquidity zone, definitely once prices reached this zone, here you would have booked the profit. This is the way you might have captured even more profit than what I calculated. Everything will happen. It's all how you are using your concepts effectively. That's it. Actually, our software has given opportunity from here till this 15 minutes high liquidity zone. But at present I am calculating as per the best 15 minutes nearest to the current price. There, till there I am calculating my statistics. Okay. So this is anyway. Till this 15 minutes, first 15 minutes, zone is achieved. We got 8.8% ROA as per one futures margin cost. Okay, this is one thing. And second thing is, actually we got one more trade. Why I am not really encouraging that second trade is, I have observed, especially many of our earlier students making a lot of mistakes with aggressive trade setups. That's why nowadays I am discouraging to go for aggressive trade setups. If you look into our previous videos and all, we focused a lot about aggressive trades also, especially in 6 months back videos. Especially last 6 months onwards, I put a one step backward because you guys are making mistakes. Because aggressive trade setup, if you want to go, definitely experience is required. That's why I explained about aggressive trade setups in lesson 21. One of the videos in lesson 21 is about aggressive trade setup. But what you are doing, you are making a lot of mistakes. Not in a position to judge whether to accept that. See, that's why nowadays what I am suggesting you, if there is only high liquidity zone, then only go for aggressive trade setup. When we go for aggressive trade setup, zone is not a fine-tuned zone. Our zone is not fine-tuned. So you have a 75 minutes high liquidity zone, you have a 5 minute zone, but the 5 minute zone is not inside the 15 minute zone. It is not overlapped with 15 minute zone. There is no 15 minute zone at all. But you want to take a trade in the 5 minute zone. That is aggressive trade setup. Many times those zones will be violated. Many times. At least I can say 80 to 90% scenarios, those zones will be violated. But the 10% scenarios, they get success. Why? Because there are strong price action clues. Due to that, they work. And many of our students, especially who land these aggressive trade setups, they are not in a position to assess the price action clues properly. Simply taking the trade and it is violated, and finally thinking zones are not working properly. The moment I realized, after I took the feedback from some of you people, I understood what kind of mistakes you are making. Then I was suggesting not to go for aggressive trade setups unless you find too strong price action clues. If you would have observed, we have two price action clues are there. Still I am not considering, because if the two clues are from the same category, if they are from two different categories, at least I would have considered, as per our recent way how we are handling aggressive trade setups. See, without price action clues, you can go for aggressive trade setup only if it is a high liquidity zone. High liquidity zone, okay, fine. We get a good success rate for that. Worst case scenario, at least up to 60% success rate we will get for high liquidity zones. Normal zones, 90% they will fail. And look into this Apollo Hospitals stock. Even though I did not consider this trade, but why I am teaching, at some point of time you should gain experience, right? How do you gain experience if you don't discuss? But why I am not putting in the Excel sheet is because later on when you refer these data, I don't want you follow the same and again you fail, you didn't properly assess. Again you say aggressive trade setups are not working. Just for experience point of view I am telling, but remember I am not considering this trade for the performance evaluation of our high liquidity zones. See, this is the analysis I did. Actually, two things I have to tell. One is, now this is the right time to start my discussion about the topic of the day. What is the topic of the day? When we can use previously analyzed charts. See, this is a previously analyzed chart. This is a daily zone. Whatever is there in the chart today you are seeing, this one we already discussed previously. This one. This is already drawn previously. I didn't made any change. I didn't do any fresh analysis on this chart. I kept as it is. Actually, these zones are pierced yesterday itself. So for today's analysis point of view, I should have removed the old because it is gone. This zone is gone. And I would have done fresh analysis on this chart. But I didn't do. Why? Because I want to teach you this important topic. Okay, this is previously our software identified this zone as a drop on base candle, medium size candle, part of the zone, and then a rally candle. This is how our software identified. And when I analyzed this chart, probably one of these days, maybe when it was near, maybe our software might have given. Maybe on this day or maybe on this day, 22nd January, if our software listed, I might have analyzed on 23rd HLQ analysis video. If not this candle, somewhere this candle, our software might have given this on 28th November. I might have analyzed on 29th November HLQ analysis. Or if our software gives on 29th HLQ zone generated, I might have analyzed on 2nd December analysis. One of those videos, this analysis will be there, definitely. I am thinking maybe somewhere in one of these candles our software might have given. But anyway, this is there already. Please look into the old videos when we analyzed. On that day, what I explained here, we have a 75-minute zone here. That is what I have drawn. How I drawn this 75-minute zone? This is the rally, 2 base candles and a rally candle. This is the 75-minute zone I have drawn. And within this 75-minute zone, again we have 15-minute zone. We have to look for fine-tuned 15-minute zone. But within 75-minute zone, the structure is not really good. So this is a failed ERC. Again, rally. In between, no base candles. There are higher chances this will be violated. But what we observed? Lesson 22 concept. What is lesson 22 concept? Lower time frame zone as an horizon to the higher time frame zone. This is a fine-tuned 75-minute zone. This fine-tuned 75-minute zone is having a rally candle as a leg-in. This is a failed ERC. Dynamic view, it is a rally candle. We have two base candles. We have a rally candle. We have drawn this 15-minute zone. This 15-minute zone is overlapped with the 75-minute zone at the distal line. Such kind of zone, order flows are much stronger. But this is a 15-minute zone. You should not take trade on the 15-minute zone. You have to go for fine-tuned 5-minute zone, because we are using intraday related trades in HLQ zone analysis. So if you directly take a trade in 15, risk management is not possible for us. So that's why we went to the 5 minutes time frame. In the 5 minutes time frame, here we have an excellent drop base rally. Okay, till the 5-minute zone prices enter, 15-minute zone, they didn't reach fine-tuned level and started moving. That means this area, the order flow will be very strong, no doubt in that. Okay, Apollo Hospitals. So this is the zone. And when this zone is tested, yesterday, is our software identified this zone on day before yesterday, end of the day? No. Because our software did not identify this zone day before yesterday, end of the day, we didn't focus on this stock. What we do? We just ignore the stocks which are not listed. We analyzed it earlier. We have all our analysis on our charts. How perfectly we analyzed it. See, yesterday prices went and reached this zone and then started moving and finally reached the 15 minutes target. It happened yesterday. After that again prices came down, this zone is violated. When it happened? Yesterday itself it happened. Yesterday first it gave a trade. Second time it consumed the remaining order flow. Now the remaining order flow it is not having. Even if you take second trade yesterday, your trade would have been stopped out second trade. Still, the first trade gave you huge profit. You won't bother about the stopped out trade for your second trade you have taken yesterday. And yesterday at what candle finally completely it is violated? At 12 o'clock 35 minutes candle. When you got the trade? Morning 9:15 5 minutes candle. But you may say morning 9:15 1 minute candle we don't take trade. Actually you got trade in morning 1 minute I think 1 minute 9 o'clock 19 minutes candle you got. That means your trade would have been executed. Okay, what is the topic I am saying? When we can take the analyzed charts, when we can take the trades from the analyzed charts, anytime you can take previously analyzed charts, you can take the trades. Now immediately you should ask the question, but in lesson 23 we discussed, lesson 21.3, if the HLQ zone is not identified, we cannot take a trade. Yes, I told. Then immediately you have to say, why you are saying now we can take a trade? Now you need to understand the difference. Lesson 21.3 HLQ zone strategy video, I clearly explained, don't take trades if the software is not listed. HLQ zones are valid only for the next trading session. That point I clearly told you, because we are expecting a minimum 80% success rate from HLQ zone trades. We want more successful trades. That's why we don't want to get into the zones which are identified earlier. We analyzed the charts but not listed in Recent means our yesterday end of the day report, they were not listed. That's why we don't want to take the trade. Now you can ask a question. Now you are saying we can take a trade. Yes, you can take a trade, but don't expect 80% success rate. That is the important point. You can take a trade. Previously I told this point 3 to 4 times in different HLQ analysis videos. But today I am making a separate session. Why I am making a separate session? Sometimes your HLQ zones might be just 1 or 2. See, that is what happened yesterday. Day before yesterday, our software gave you only 2 HLQ zones. And we didn't get any trades yesterday. You might be sitting idle yesterday because trades did not happen. In such kind of situation, if you are having confidence that on that particular day maybe our zones may not be executed because the list is very less, then in such kind of situations, look for opportunities on the previously analyzed charts. A perfect way of analysis is there, such kind of zones. See, why we can take a trade? Because this is a LTF lesson 22 concept. It is much powerful. The success rate could be high. That way selectively you choose the trades. If yesterday, if you would have taken a trade because this stock is already analyzed earlier, it might be there. You might have kept all these earlier analysis charts in some watch list. If this stock prices are nearing, take a trade. But problem is, you can't expect 80% success rate. Maybe the success rate could be between 55 to 65% or sometimes maybe 70%. In between it will be there, not 80. So that's why on average I am saying 60% could be the success rate. You have a difference of 20%. But still 60% is a good success rate, right? But when we have to take, when you don't have any other options, on that day only you choose this. If yesterday in case, if you would have taken a trade in Apollo Hospitals, you know how much profit you would have got? It reached the 15 minutes target. Here we have a 15-minute zone. Rally, 2 base candles and a drop candle, and then prices entered. See how sharply prices moved in one candle itself. And next candle it reached the target. That means in less than 30 minutes you completed. Let me go to 1 minute. You get better clarity. 1 minute chart. We have to ensure it is not 9:15 1 minute candle, our trade. So this is morning 9:15, 17 candle, even 18 candle, both the candles you got the trade. This is the one. And then reached the target here when 9:32 candle. How much profit you would have got? $6,886.7, because you might have kept some buffer. Remove this 0.75 also. Maybe 6,885 could be. You might have exited. Some buffer I am adding. You won't exit exactly at 15 minutes. A little below. Maybe this is around 6,885. So somewhere here it could be 6,885 minus. What could be your entry here? The zone entry 6750.80. Maybe you will not take exactly, you will add some entry buffer. Say roughly I can say 6752. 6752 means somewhere here, or 6753. 6753, some buffer, entry buffer. You would have got 132 rupees profit. Yesterday you might have got from this stock. Maybe if not this stock, some other stock you might have looked into that. But today we got an opportunity to discuss about this stock and we are discussing about this. 132. And what is the lot size of Apollo hospitals. Let us see. Zero the margin calculator. We have February futures. You have 125. So 132 into 125. You would have got 16,500 rupees profit yesterday. The previously analyzed chart prices came. How do you know prices are coming there? Because you would have kept alerts. Trading view alerts are there, right? When you keep alerts, when prices are nearing to the zones, you get an alert. That way we will come to know. How many previously analyzed charts you will keep? Not so many, right? Every day prices may not be coming to all the previously analyzed charts. Only few charts only it will be coming. You get an alert, immediately you look into that zone, and if you feel that is a good zone, you will plan a trade. When you will plan, when you don't have proper HLQ zones from your list. That is what happened yesterday. If yesterday, at least you are expecting with 60% confidence level, because success rate is 60%. HLQ zones, software listed zones, we have 80% confidence. But this stock you will keep only 60%, because something is better than nothing, right? When no stocks are there, something is better. Nothing wrong in trying. If you get a profit, good profit you get. If you get a loss, whatever the risk is there in that zone, that small risk, anyway, that will be always less than 2% risk. Some people keep even 1.5. Some people keep only 1% risk. Whatever the risk, that risk only will be executed. That much small loss only you get. It won't hurt your capital. It could have given very huge. See, today price is where it is closed. Today's price, is it near to this zone? Yeah, here. Now price is here. Our trade would have been here. That means some more level price would have been reduced. Approximately the same thing, maybe 1,50,800 rupees might be there, your lot size. Approximately I am calculating, or maybe the same. 900 I will keep the same value. To calculate the ROI into 100 divided by your margin cost 1,50,900. You could have got around 10.9% ROI, you got close to 11%. Even though your software did not list the stock, still you would have planned the trade, because we didn't have enough HLQ zones. And moreover, one zone is, we know it will be violated. You have only one stock, actually, to be honest, only one stock is there. That stock also we analyzed earlier. That analysis is there in our charts. Metropolis, right? The second one. The one we already analyzed and having order flows. But yesterday prices get into that area. So that's why the previously analyzed charts will be helpful to you. Same thing you have seen even in GMR also. Okay, GMR, if you would have done analysis properly earlier, you would have got an opportunity on Saturday. Of course, Saturday we have plenty of stocks. So we won't get any necessity to look into GMR on Saturday. But what I am trying to say, Saturday what happened? Here we have one 5-minute zone we just deleted. From that 5-minute zone, it picked up the price and sharply it came down. Huge profit it has given. Just imagine how these HLQ zones are. But the thing is, they have less success rate. Okay, today you are seeing the zones that gave you the success. Sometimes you might be seeing the zones that might have been stopped out. We have a proper order flow, but that might have been stopped out. So that's why the success rate is reduced. But still, majority of these zones are getting success compared to the failures. But at 60% level success. But HLQ zones listed by our software, they have 80% success rate. 60% HLQ zones listed earlier by our software but not listed today, they have 60% success rate or maybe 55% success rate. So that's why go for those zones only when you don't find. And the third option, some people are not having to take in the subscription. They want to try trades because they don't know which HLQ zones. Because every day we are discussing these HLQ zones. Some of these zones you may plan for your trades, but remember you have a success rate only 55 to 60% or approximately 60%. You have higher chances that more trades will be stopped out. If you are purely depending on the stocks we analyzed earlier but not listed by our software today. So you get that hit. That means you will be losing more stopped out. Of course, overall profits you will get. But the money you will be losing from your profit. See, even though you get profit, but more failure trades means some more extra money you will be losing from your profit, right? That extra money will be more than what the 5,000 rupees fees you are paying. That is what you should understand. See the logic. You may think it is free. Okay, because they are free, okay, let me all these analyzed charts, we will take the trades. Fine. You will take. But what is the problem? You have this kind of problem. But this is useful for the people who did not learn the subject properly. Because the fine-tuned zones I am explaining every day after the chart. Some of the zones not executed, but I am explaining. So you will keep that analysis in your charts. Next time prices are coming, you want to take trades. For those people, it will be useful. But for those people, what is the use in learning that concept? You are looking for only money, not for learning the subject. You never improve your subject. Simply if you are depending on my analyzed charts and later on you are taking trades, but that too having only 55 to 60% success rate, if you are depending on those analysis, when you will learn the subject? You have to learn the subject. Initial stage you will suffer. Without suffer, how do you get the experience? Some people think first 1 or 2 months maybe their analysis making mistakes, getting more losses. Some people may feel like that. You think whatever the money you are investing for that 5,000 rupees or next month another 5,000 or third month another 5,000, 15,000 rupees you are investing, you feel that is the investment to gain your experience. After that what will happen? Slowly you will be improving. Your perfection will come. Your psychology will be much stronger. You won't be hurry while analyzing the charts. Any doubts you have, you just leave the chart. You don't take trade. When you have 100% confidence, you take the trade. That kind of mindset will be developed. So that's why initial stage, whatever the money you are investing, you feel whether you get profits or whether you don't get profits because of your perfection or imperfection in your analysis, whatever reason. First few months you feel it is an investment for your future. What kind of investment? To improve your experience. Experience won't come unless you are really participate in the trading. That is the way you have to prepare. Without preparing that, directly if you get into the trade, and definitely sometimes it will hurt your feelings. What you are seeing on the charts is different. When you really sit in the machine and started tracking trades, at the time the psychology is different. See, charts won't give you any difference, but the psychology, the way how you controlling your feelings or emotions at that time, that makes the difference. For that you need to stay in the market. At least a minimum 3 months you should sit on the machine and you should do the trading. That is the reason why I suggested most of you people at least to do 2 to 3 months paper trading. So that you understand how your emotions are playing. If something is stopped out, it won't hurt you because you didn't invest your real capital. Do paper trading. Invest. Nothing wrong in investing NeoStock premium subscription for 2-3 months. That investment is small. Anyway, you land a big course, a huge, this is a highly expensive course. You land the course with free of cost. So there is nothing wrong investing, giving back some small money to the NeoStock. contributing a small money. 15,000 means it is a small for 3 months. So by using the reports, you analyze every day. Do the paper trading. This 15,000 you are investing for 3 months is only for education purpose. But during this 3 months, you know what will happen? So much of experience you will gain. So many mistakes you are making, you will realize. 4th month, the 15,000 you will get it back. Not 15,000, maybe 2 or 3 times more you may get profit, depending on your investment. This is how people should plan the things. Everything, if you are expecting free, you won't get it properly. At some point you have. First of all, course itself is a highly expensive. Why I provided free training for the course? Because my interest is not for the education point of view. Today I am providing all these things. You are getting an opportunity because I am promoting NeoStock software. In future, I may not be doing all these analysis on every day. But nowadays you people are lucky because you are having. But at least future people have these videos, recorded videos, they will go through the gain. But every day listening the videos on the live market and learning is different. And old videos listening, some difference. There won't be much difference, but small difference might be. That difference is also like our way of our, how our, what is the right word? Some kind of human psychology related, like how we feel. A feeling only. See, whether old videos or new videos, learning is the learning. But when you see on the live market related analysis videos, you feel more comfortness. That's it. But knowledge point of view doesn't make any difference. Why always I am suggesting all the members, you must go through all the important videos I kept in important strategies and analysis playlist. Because some people completed that series. Then they become strong traders and now comfortably they are trading today. You also should be like that. So everybody, please, 3 months, first 3 months, focus on these HL, especially those who are, I'm talking about, who wants to do day trading. But those who are doing swing trading, you will be using bullish and bearish trade setups or some other new concepts you will be learning in the coming days. You will be using them. I remember swing traders are also asking more analysis related things. I will get into that once we complete top-down analysis. Until then, why I am making you to hold is, first you learn on your own something. Once you learn top-down analysis, you will understand the kind of mistakes you will be doing. Okay, this is about GMR Infra and similarly, but GMR Infra, one thing we missed. Here we have an aggressive trade, sorry, not GMR. Apollo. We shifted from Apollo to GMR, right? Apollo, we have an aggressive trade is also there. This I am explaining. I don't want you to jump into these aggressive trades immediately. Please remember, just to make you get better experience, now I am focusing on this. See the first price action clue. This is the one. Prices came here and started moving up. Generally, how I identify, let me tell you. What is here? Here we have a drop base, rally is there. And is it a fine-tuned zone? No. It is a normal 5-minute zone. But this normal 5-minute zone, institutions might have kept a strong institutional order flow. Is it tested? No. Just near to this. Just before. Maybe a 5 paisa or 10 paisa before that. See what is the high of this zone? The high of this zone is, I have drawn wick to wick. Moreover, I have drawn this zone wick to wick. The high of this zone is 6707 30 paisa. What is the low of this candle? Here we can see the low of the candle. The low of the candle is 6707 55 paisa. Entry is 35. And low of this candle is 55. That means another 20 paisa. This is wick to wick I have drawn. If I have drawn wick to type 1 proximal, there is no much difference between. Still you will see some more gap here. And what is the type 2 proximal entry here? 670690. Maybe another 45 paisa further it went down. Okay, what I am trying to say, prices came near to the zone and then sharply it moved up. Maybe almost the end of this 5 minutes time interval it reached and now started moving up. The time is over and then again see here with a gap up. Did you notice with a gap up? 5 minutes gap up, they were moving up. That has created a curiosity on this zone. Definitely this could be some strong aggressive trade setup should be there. But what is that I told you, such kind of zones, many times you are making mistakes by not properly assessing. While in my assessment, what I observed? Price moved sharply up, that is one point I observed. While moving, some gap up also it took place, that is also I observed. And one more observation I did. Today, once again prices came near to the zone and again they were started moving up. That means still in this area strong order flow is there. Now after that again prices came, it gave an entry and now they were started moving up till now, till the market closing, it was started moving up only. See, this trade would have given a very good profit, right? See, first thing is this trade would have given you good profit on Monday, yesterday. If you would have considered with 60% success rate or 55% success rate, with that confidence you would have selected, yesterday you got a very good profit. Almost close to 11 ROI you got, right? 11% ROI you got yesterday. The same stock yesterday this is violated. Because this is violated, what you do? You will remove this analysis. Today I didn't remove because I want to show you how we got the trades from this zone. The moment you see here, you will see an aggressive trade setup. Prices came up to here yesterday. Why moved up? That means here in this area strong order flow is there. That is the way we recognize. But here this is the first zone. Still you may not be taking, considering this, because sometimes these zones will easily violate. But today morning again what happened? Once again price came near morning 9:35 candle. This is. Once again it came near and again started moving up. After that again after some time slowly came. And if you are convinced with these price action close, if you would have taken a trade throughout the day, it gave a very big move. I know you might be exiting somewhere here, you have a 15 minutes target zone. Let us look into that. So here you have a rally candle, you have a base candle, drop candle, and this is the candle actually not completed when you take the trade. Initially you might have fixed your target will be in this zone initially. Actually your target reached, initial target, but what happened after that? This candle is completed. Now leg out candle is formed. Now whatever the situation, you have to exit here because a new zone was created. A rally base drop. So whatever the profit, you have to book the profit. See, after that again from this zone sharply prices came. Sometimes what will happen? This zone will be violated. Today it didn't happen. Now again institutions created with a drop base rally, they pushed the prices up. Okay, by seeing end of the day price, we may feel like okay, it gave a good profit. But practically when you are in the live market, your mindset what it says, okay, it reached, now we have to book the profit. If you don't book, prices are coming sharply. Now what you will be thinking? All my profits are going, prices are coming down. Now maybe this entry again, because it is already tested, maybe this time maybe it might be violated. I may get stopped out instead of getting profit. This is how we feel sometimes. And what we do, we exit here. And then again market started moving up. That's why to avoid such kind of issues, Once it reached the 15 minutes target, we will book the profit here. Today it happened, this is violated and moved further. Why it is violated? Is 5-minute structure is not good? Let's see. 5-minute structure, okay, no issues with the 5-minute structure. Not a problem with this 5-minute structure. Okay, anyway, this is just to make you people get some exposure in future how you can do complicated complex analysis. I am teaching you, but time being I want to avoid aggressive trade setups because you people are making mistakes, especially beginners. So don't do any aggressive trades until you get some good experience. Go for aggressive trade setup only if it is a high liquidity zone. Because high liquidity zones you have confidence at least. 5 minutes high liquidity zone. So this is Apollo, and there is any one more stock is there. Yeah, AU Bank. AU Bank we didn't take trade, otherwise it could have been a good trade for us. Huge profit it has given, AU Bank. See, prices came sharply. Today throughout the day it is falling, supply zone. This is a 75-minute supply zone. But actually we have a daily supply zone here. That is also high liquidity zone. And I already drawn the daily supply zone in my chart. That's why I know there is already a high liquidity zone. Previously our software identified the daily zone. Let me show you. Actual software recommendation is from 75. We have a daily zone. See here we have a rally candle, one base candle, medium size candle is also part of the base. This, so that way we have two base candles and a drop candle. This is the daily high liquidity zone suggested by our software some few days back. So when I opened the chart, this daily zone is there. And what our software suggested? A 5-minute zone, 75 minutes high liquidity zone, and that 75 is overlapped with the daily zone. So let me go to the 75 minutes time frame. This 75 is also high liquidity zone. And our software suggested 75 minutes high liquidity zone. Okay, how our software identified this zone? This 75-minute zone. Our software identified this as a rally, one base candle, this failed ERC candle as a drop candle. So our software convinced this is a leg out candle because reason number one, candle is big, but it is a failed ERC, but still it considered because the body completely came out and a considerable amount came out of the zone. Some software calculations are there to consider. So that way this rally based drop high liquidity zone it identified. And this zone is working very well actually. See, previously also prices entered into the zone and came down. Today also prices entered into the zone and came down. This 75, I am talking about 75. See the 75-minute zone, first time, second time, third time, 3 times it went inside and came down. But the problem we are facing in this zone is the risk. What is that risk? So go to the 15 minutes time frame, you will understand. See here, we have a rally candle, we have a base candle, see, we have a drop candle, very big candle, and moreover the body completely came out of the zone. When you draw this 15-minute zone, I have drawn type 2 level, even if you draw type 1 also, see, completely came. Okay, so we have a rally based drop. This is 15 minutes, but where you have to plan our trade in the 5 minutes time frame. So go to the 5 minutes time frame. See 5 minutes also we have, see here, You have a rally candle, this is the leg-in. You have a base candle, and then you see failed ERC candle, drop candle, how it is coming down, dynamic view. That way you can draw a zone like this. Rally base drop. See, the complete candle body came out of the zone even though it is failed ERC. Dynamic view, it is like at some point of time prices reached here. From there it is a big drop. And see this 5-minute zone, very big risk. Already once prices entered into the zone previously. And today prices went, you see. Somewhat deep it went inside. But can you handle this much risk? You cannot handle this much risk. But what I identified is, there is because 5 minutes anyway you can't take a risk. So I deleted this 5-minute zone. Here have you noticed? A drop base drop. This is the 5 minutes horizon to this entire 75 minutes high liquidity zone. Of course, to the fine-tuned 15-minute zone also. All are overlapped with this drop base drop. The 75 minutes high liquidity, even fine-tuned 15-minute zone, all are overlapped with this drop base drop. So that means this is a fine-tuned zone at the distal line. But this 5-minute zone is the horizon for this entire high liquidity zone. So that is the reason why we want to plan our trade in this zone. But unfortunately, what happened? Prices did not reach up to that. A little before, price sharply came down. That way we missed our trade. Even if you add entry buffer 0.1%, still with 1 rupee difference, you will be missing the trade with 1 rupee difference. But here, okay, we didn't get the trade. But see the power of our high liquidity zones, how they are working. If it could have been other zone, it might have been easily violated today, the zone. So they are the zones actually holding the prices. That is what we should understand. See, today is a bullish day. But how this zone worked? In a bearish way. See, today how many points? Market 378 points it gave today. Nifty. But this stock is how sharply it came down. That is the power of high liquidity we all must understand. Whether you take the trade or you miss the trade, that is a different story. How well these zones are working, that understanding is very, very important. Okay, next remaining stocks we will see quickly. NBCC and MFSL, only these two are there, right? AU Bank we already discussed. Just now we discussed AU Bank only, right? Yeah. NBCC. NBCC is a daily high liquidity zone. We have a rally, 2 base candles and rally. This is what our software suggested. And this one I fine-tuned with 75 minutes. 2 order flows I identified. One is a drop base rally and another one is rally, 2 base candles rally. And both these 75 minute zones I fine-tuned with 15 minutes time frame. Here you see, you have a drop, 2 base candles, rally with pro gap. And also here you have rally. This is a big candle rally. You have 1, 2, 3, 4 base candles and a rally candle. The 15 minute zone, rally, base, rally. Next, go to the 5 minutes time frame. In the 5 minute structure, this one I considered as a leg-in. This is the one. Actually, strictly speaking, this is a drop. Again, all 5 candles and rally we have to consider, strictly speaking. But why I limited this is, there is a reason. See here, price moved in a balanced way here. That's why according to me, probably this is the area we have a strong institutional order flow. If I draw the whole thing, again risk will improve. But see the logic how I am taking decisions. That is important. That kind of decision making also you should apply in the coming days once your experience grows. Actually we draw, this is a drop candle. You have 1, 2, 3, 4, 5 base and a rally. That means same 15-minute zone is also a 5-minute zone. But why I considered only these 3 candles is here balance took place. There is a balance here and then imbalance took place in this candle. That's why I limited my risk to only these 3 candles. Actually, strictly speaking, this is not a leg-in candle. But the logic behind drawing is, this is the one. Here price moved in a balanced way before this imbalance took place. That's why I'm not really worrying about this leg-in. Of course, leg-in is important. We have a leg-in here. A clear leg-in drop candle. But why I limited my zone to these 3 candles? Because of the balance activity took place before the imbalance. Hope you got it clarity. Okay, but anyway, today price did not enter into the fine-tuned zone, so we didn't get any trade opportunity. And the last one is MF. There is one more. Union Bank is also there. Union Bank is 75 minutes high liquidity zone. Is it 75 minutes? Yeah. We have a rally, base rally, 75 minute zone. This one I fine-tuned with 15 minutes time frame. In the 15 minutes, 2 order flows I identified. One is at the proximal line and another one is in the middle of the zone. We have a rally, base rally. How I identified is by hiding this. Yeah. That way I consider rally, base rally. Big candle this is. And again rally, base rally. 15 minute zones. And these zones again fine-tuned with 5 minutes time frame. First let me show you the bottom one. Here we have a rally candles, 2 base candles and a rally. This is the medium size leg-in, 2 base candles, rally. This is the institutional order flow. And here you have, see a very big failed ERC candle is a leg-in. You have 1, 2, 3, 4 base candles, rally. Generally we draw week to week, right? But why I'm showing is, of course while planning we plan like that. But why I'm showing this is a high liquidity zone. Many times this zone is getting tested. See, this is the first time it is tested and moved up. So next time again you see prices went inside. Not only that, here again drop base rally is created. LOTL. Again prices came, again drop base rally is created. LOTLs are getting created here. And again here drop base rally is created. So that means this zone is working. Here also see recent time drop base rally with pro gap. So that is the reason why I am considering these areas. Maybe when you are planning the trade, you have to go either inside or you have confidence about this drop base drop, draw the zone. If this is violated, when prices go deep inside, then you plan the trade. That way you have to do. But if you are planning your trade, if it is within 2% risk, okay. If it is beyond 2%, you can't take a trade, right? So at the time, consider only this drop base rally. In case if it violates after prices reaching somewhere in the middle, then plan another trade. But anyway, today price did not enter into this zone. We didn't get any trade opportunity. And the MFSL, this is a 75 minutes zone. Yeah, this is also one I want to explain actually. Sorry, I forgot. This one we analyzed a long back. This is the zone. MFSL. This is first one is violated. Why I didn't delete is this is the reason as part of our today's topic. This is another example. Sorry, actually completely forgot about this stock. So this is the rally identified by our software. And we analyzed this stock long before. When we would have analyzed, let me go to daily time frame. Probably somewhere here on this candle, we might have, our software might have given 30th January. So 31st January analysis video, maybe you might have identified how we analyzed on 31st analysis video. Because the closing candle probably on 30th. Let me go to 75, you will have clarity. 75 minutes last candle. So maybe in this candle, on this day, this is the closing candle, last candle, it might have given stocks near the zone. So we might have analyzed on Friday, last Friday. Look into last Friday, we analyzed MFSL or not, you will understand. So that analysis, what we did, I kept it here. It is having 3 fine-tuned zones. 3 fine-tuned zones are there. Go to the 15 minutes time frame. Here we have 2 15 minutes order flows we have drawn. We have a rally, 2 base candles and a rally candle. And then we have a drop, 3 base candles and a rally candle. So total 2 15 minute zones. Inside these 2, we have 3 order flows are there, 5 minutes order flows. Here we have 2 order flows, here 1 order flow. Now go to the 5 minutes time frame. See the order flows, 5 minutes order flows. Here we have a rally candle, 1, 2, 3, 4, 5 base candles and a rally candle. And second one, rally, base, rally. Third one, drop, base, rally. So we have 3 order flows. And first order flow, already we got a trades. See here. In this candle, this zone is already tested. Second time came very close, almost came very close, but it is moved up. Third time it is what happened, it is violated because it is already a tested zone. Most probably you may not be planning your trade. So for time being, let us assume it is a tested and you are not planning the trade, you are not planning. For clarity point of view, I am deleting. Let us assume you kept this your analysis like this. Now this should be your immediate next time when prices are entering. If our software recommends, definitely we plan our trade because it is having 80% success rate. If our software does not recommend, still if you want to plan your trade next time when prices are entering, its success rate could be between 55 to 60% success rate, or approximately around 60% success rate. Are you seeing the difference? When software is listing or not listing. But prices entered into this zone. When? It happened on Saturday. Saturday prices reached, and after that you see Saturday how it pushed the prices, how much profit it would have got. Is there any 15 minutes target? Yes, we have a 15 minutes target here. Sorry, not here. Before Saturday. Yeah, because this candle is completed, here this is the target. We have a rally candle, 3 base candles and drop candle. So huge target you would have got. But why we didn't look into this stock on Saturday? Because Saturday we have plenty of stocks. Our software has given so many stocks. Whatever it has given on Saturday, we got 11 trades we got on Saturday. How you get time to focus on this? But why we are discussing, just to tell you the 60% success rate itself, how it is working to make you understand. But This you should use only on those days when you won't find proper stocks in your HLQ report. At that time only look for previously analyzed stocks. When you are already having good stocks in your software report, they have 80% success rate, those zones. Then why do you want to look into 60% level? When you have to go to the next level, if first level is not working for you, that means that day they are not giving you the trades. On that day you explore the old trades you analyzed. So that's why whatever the charts you are analyzing, keep them in a separate playlist. And the future they might be helping you. Future means when the day when you don't have proper zones from the, because every month we will see 2 to 3 days our HLQ zones may not be getting into the fine-tuned zones. You will be missing, you won't be having any trades. Every month on average we see 2 or 3 trading sessions. I think January almost every trading session we got the trades, January. But February you see, yesterday, none of our HLQ zones are executed. In such kind of situation, any previously analyzed zones prices enter, you take a little extra risk, another 20% extra risk. And if you are confident, take a trade. If it is stopped out, you have to prepare for that. Because you have 40% failure chances are there. But that's why I am saying when nothing is there, something is better than nothing. That kind of situations you make use of this concept. Hope you got clarity. When you have to use previously analyzed zones, that is very, very important. But those who haven't taken subscription still want to take trades, you can use this approach. But remember, you have 40% failure chances. And those stopped out trades, money might be equivalent or more than our premium charges, what we are charging. So that's why it's up to you how you plan. But at least you will be knowing. And also please don't blindly take the trades every time. Before taking the trades, you analyze the chart once again. Sometimes we make mistakes in our analysis. That is what you have seen in ZMR Infra. If Saturday price action would not have happened, the old analysis I would have left it as it is. So that's why sometimes any mistakes you may see once again when you do revision on your previous analysis. So this is about HLQ zone analysis. Hope this information will be useful to you. Let's all meet again in our next video. Thank you.